Hello, nice to have you with us once again. In the studio with me this time around is Gerhard Lampen, head of Sanlam iTrade at Sanlam Private Investments. You will recognize that face if you watched Top Trader. And there's still just a short while left for you to carry on playing before entries open for the new season of CNBC Africa's Top Trader. Those entries open at the end of this month. We'll go into that in a little bit more detail, but that's what we're talking about this time around. We're going to be talking about trading online. Gerhard, nice to have you in the studio. Finally, we've managed to nail you down and get you onto Money Sense.
Thank you, Jim.
Out of Top Trader. Right. For those people who don't know about this particular trading option, let's go right back to the basics. We've spoken about online trading before, but let's go right back to the basics. What is it? How do you get involved? And how do you start off trading? I think people are scared because A, they don't understand trading, and B, like me, they don't really understand technology.
Yeah. Jeremy, I get that question a lot because especially younger people, they want to get involved because they like the adrenaline, the excitement in online trading. Even if they don't have a lot of money, you know, it is just so nice if you buy an MTN or a British American Tobacco, it goes up, you know, it's a good feeling.
Yeah.
And also,
conversely, you have the bad feeling when it goes down.
Oh yeah, you do. But like golf, you know, you forget the bad shots. Otherwise, people will stop playing golf as well. Although this is more serious, and I'm going to explain that it's not a casino. It's not something you just go and do.
Yeah.
The other group is the guys who start retiring now. You know, a lot of them had very high-powered jobs. Now suddenly they play golf. They say, I'm going to play golf 5 times a week. But suddenly the golf doesn't improve that much. They get a bit bored. So they start looking at online trading, and I tell you, they get so involved. Some of them sit there 7 hours a day watching the markets, buying, selling, and enjoying every moment of it because they understand the technology and so on. Now, okay, firstly, you have to read a lot. Before you start investing, you read a lot. You have to watch your TV programs like CNBC, where you get information. You have to read newspapers, financial pages, financial magazines. The radio shows, 5 o'clock, 6 o'clock in the afternoon, there's some very good radio shows focused on the market. You have to do the sweat. Then I would suggest you open an account. With us, you can get a virtual trading platform, like the Top Trader competition. Top Trader competition is great because it costs you nothing. You get R1 million to buy and sell shares with on live prices, and you can see how the market reacts. So get that experience before you start committing money.
Okay, I want to go back one step here. And that was actually one of the reasons why I first came to CNBC and said to them, let's start this show called Mansfield's Money Sense. Because I do watch Business Tonight. I do watch Closing Bell. I do listen to Bruce Whitfield on 702 or Cape Talk and his business show.
Very good. Yeah.
I read the Financial Times. I read the Business Day. But 70% of it I get, 30% of it I don't quite understand. It's that 30%, I think, that makes people like me and a lot of people like you as well, who have the money to invest but are just that little bit nervous about going about it because we don't quite know.
A bit apprehensive.
Yeah.
I think what you need is you listen to all this, but you listen to the shows and see the TV, and you just try to take whatever they give you. I think you have to go one step further and spend a bit of time on educating yourself on how to analyze a share. What do you look for? Because the guy says MTN on hot stocks, they say, okay, MTN is a good share. Yeah. But you need to do some research yourself. And we've got a learning center on Sanlam iTrade, which tells you how to analyze shares, how to use P ratios. Very, very important thing, a P ratio. We won't go into it now, but it helps you to determine whether a share is expensive or cheap. So you have to do that so that you can look at those things. You can see, okay, this company has got, let's say Woolworth's got a 25 P. That sounds high. It's got it's expensive. But its growth in earnings have been quite substantial. So if that is also 20% or higher, then it's not too expensive, so I can buy it. The other thing I think you would like to do is to get some indication of how a portfolio looks like. What are shares in portfolios? Now, we've got some model portfolios on our website, run by Sanlam Private Investments, just the top 5. So that gives you some indication. Also, we've got a Facebook portfolio. What we did on Facebook, we allowed our Facebook fans to select 20 shares out of a list of the top 90. And we put R1 million real money into that 20 shares, into those 20 shares. So that also, and that portfolio is actually performing quite well. So that will also give you an indication which resource shares are quite good, which retail shares, which industrial shares, and which financial shares. And you know, you use that type of thing. You can look at unit trust movements. Every quarter they come out and they tell you what the unit trust movements were. So you see Coronation, which is a good manager, selling out of the unit trust, SA Breweries, for instance. And then you say, okay, I'm not going to do that. On the website, you've got share data on every share. So you can look at financial statements when you've done the Learning Center bit, and there's some recommended books as well. So you can look at that. You can look at the directors' dealings, for instance. Every day, directors must report if they traded in their shares. So you can see this. The directors are selling heavily out of
their own company.
Yeah, and you say, hey, I'm not so happy about that.
There's a reason why you...
Yeah. So there's lots of information. I think what I want to lift out is what makes online trading very attractive is what we call SENS news. Now, any news from a company that's listed must be released on SENS first. I don't know if you remember last year, APSA got into big trouble because it leaked out before it was on SENS. We've got a live SENS news feed on our website. So our clients see an announcement about the director resigning, results, trading updates, all that, see it exactly at the same time as a stockbroker. Now the stockbroker has to phone his biggest client first to find out are we buying or selling, and then his second biggest. By the time he's phoned his first big client or just put in the order, 1,000 of our clients already traded because they can do it immediately and they get the news exactly at the same time. So it makes online trading very, very worthwhile. You know, you can trade faster than the stockbrokers.
Okay. Now I'm going to, you see, I'm going to pull you back one step again.
Sure. Sorry,
because
I ran ahead.
You're just galloping ahead here.
Yeah.
Before I even start with this, what do I essentially have to know? Or can I go onto your site and start learning from the base upwards?
Yes. You'll get that definitely on our site. We've got from A to Z on investments, the terms, the basics, very good recommended books, one written by Alec Hogg. And you can start there with those modules. They're short modules, 2-3 pages, to learn those things. So you start there, open a virtual trading account like the Top Trader one, and start buying and selling shares and getting that experience. But I think the best place to start is there because you need that little bit of education. Yeah. But you'll get it there. And also there's links to educational websites. Simon Brown has got a very good one, Just One Lap. It's for free. They do lots of webinars. You can download the webinars, watch it at any time. They explain to you how to invest and how to make your decisions.
So basically what you guys have done is you have created a space in which people like me who are a little bit nervous about getting into the market directly and also maybe are not that technologically savvy can go into and start playing around and start picking up information, data, facts, and start applying with it without having the risk of having to put the money in up front.
Yes.
And you obviously are then wanting to translate those players into real investors at some stage. Once I've got the confidence through it,
absolutely,
I then say, okay, I'm prepared to put money in now because I've actually done pretty well in this virtual space.
You know, we've been running virtual competitions since we started in 2007. And I found people, because I mean, 2007 the market started falling, so it wasn't a very good time.
Yeah.
2008 we also had a crash, a big crash. But even 3 years after that first competition, people who just continued with their virtual portfolios, they got the experience to see, if I invest in good shares, eventually they do recover. Within a year or maybe 18 months, they're all recovered and they're making profits. And then they say, okay, now I'm confident. I will go and put my money. How do I open an account?
But I mean, this has been running for years, because I remember when I was even at school, and now we're talking years ago, years and years
that
ago.
was before our time.
That's a long time, yeah. There was the school challenge, the stock exchange challenge.
Yeah.
And I remember school groups having to sit down and work out what their shares were going to be, and they picked their shares, and then they, at the end of the challenge, they saw what their shares were worth.
Yeah.
So these sort of competitions have been going on for years and years and years.
Yes, but what's much greater now is that here you can use a platform, you can trade intraday. Those days you send in a fax, you trade tomorrow, and
3 days
like
later you got your trade back.
Now you trade live. You trade on the actual prices. Now you can buy in the morning, you can sell in the afternoon if your profit is good enough, or if you want to cut your loss. So it gives you a lot more real-time experience using that.
I do remember a financial advisor once saying to me, we were just chatting generally about clients and who he had as clients and how he got them to invest. And he said to me, a lot of people, when they get to a retirement age, he would encourage them to start online share trading, because he said once they'd retired, especially if they were in a corporate environment, once they'd retired, they needed a reason to get out of bed in the morning. Absolutely. And the reason to get out of bed in the morning was to be online at 8:30 in the morning with their cup of coffee to see what their opening positions were, and to take their opening positions, and then at 4:30 in the afternoon to be online to make sure that their closing positions were right.
That's exactly what I said. We've got a big group of, in that sector, retiring people who want to do that. They've got time, they've got money. Now, you don't take all your pension money and invest it yourself, but they'll take 500,000, 100,000 more. I've actually got one client in the Cape, there on the West Coast, whose whole total retirement money is only 100,000. And that's all he has. He trades very actively. He did study himself in very well. He does not play around. He sits there most time of the day. He reads a lot. He listens a lot. But he has got that 100,000 to invest. He has to live of it. He told me the other day, he took 25,000 rand of his profits to upgrade his house. So he's doing well. Okay, now not everybody can do that. But if you apply your mind, this can be a very lucrative and a very exciting hobby to pursue after retirement.